We've all seen the headlines, we've all felt the unease, and we know something isn't adding up. And this weekend, we got yet another bizarre confirmation of just how far off the rails things have gone. President Trump and the First Lady launched their own meme coins. Yes, meme coins. So what does that say about Trump's plans for the US economy and the dollar? And how can you protect yourself from them? Let's find out. Now, Donald and Melania's meme coins aren't just quirky headlines or passing jokes. They are a symptom of something much bigger, a system that's losing credibility, a financial world that's increasingly unstable, and a president who might be signaling that even he doesn't have that much faith left in the US dollar or the US economy anymore. But here's the real question. Why is Trump pushing people's money into a meme coin? Why not into real assets like infrastructure, US businesses, or even tangible commodities? Is it because he has no faith in the US economy? Or is it because meme coins are easier to manipulate and pump up than real, tangible, and productive assets? Stick with me, because in the next few minutes, we're going to break down what this means for you and why the crypto markets are riddled with counterparty risk and why physical gold and silver remain the ultimate safe havens in a world where politicians and business influencers are pulling the strings. So let's start with the facts. Over the weekend, major outlets like the Wall Street Journal, Bloomberg, and Reuters all reported on the launch of Trump's meme coins. Now, these coins were rolled out on a Trump-owned blockchain infrastructure, hyped up by influencers, and saw their prices skyrocket before, predictably, crashing somewhat. But this isn't just about the coins themselves. It's about what they represent. Trump, once an outspoken crypto skeptic, has done a complete 180. During his campaign, he pledged to make the US the crypto capital of the planet. And now, with Paul Atkins, his pick to chair the SEC, set to replace Gary Gensler, we're looking at a seismic shift in how the US government is approaching cryptocurrency. Atkins is a known crypto advocate, and he's expected to roll back the aggressive crackdowns we've seen under Gensler and create a more favorable environment for the industry. But here's the thing. Why meme coins? Why not real productive investments? Why not use the platform that he's got to push for policies that encourage investment in US infrastructure, manufacturing, or small businesses? The fact that Trump is throwing his weight behind a speculative meme coin instead of real assets should make you pause and ask, what does this say about his faith in the US economy? So let's talk about one of the most overlooked but critical issues in today's financial system, counterparty risk. The Trump meme coin launch and the broader embrace of speculative digital assets is yet another glaring example of how little respect there is for counterparty risk in the system today. And that should deeply concern anyone who's serious about protecting their wealth. So what is counterparty risk? Well, simply put, it's the risk that the person or institution on the other side of a financial transaction won't hold up their end of the deal. And in the crypto world, this risk is everywhere. You're relying on exchanges to safeguard your funds, developers to maintain the integrity of the blockchain, and influencers to act in good faith. But as we've seen time and time again, that trust can evaporate in an instant. Take the collapse of FTX, for example. Billions of dollars in customer funds disappeared overnight because people trusted a centralized exchange to act responsibly. Or look at the countless rug pulls in the crypto space, where developers pump up the value of a token, cash out, and leave investors holding the bag. These aren't isolated incidents. They're symptoms of a system that's built on shaky foundations. Now let's bring this back to Trump's meme coin. This is a coin launched by a president, hyped up by influencers, and tied to an infrastructure that he is invested in. The price spiked and then it crashed. And what does that tell you? It tells you that even at the highest levels, there's little regard for counterparty risk. The people behind these projects aren't thinking about stability or long-term value. They're thinking about short-term gains and hype. And here's the scary part. This disregard for counterparty risk isn't just limited to crypto. It's becoming a feature of the broader financial system. Central banks have printed money at unprecedented rates. Governments are racking up unsustainable levels of debt, and financial institutions are taking on more and more leverage. The entire system is becoming more fragile, and the people in charge don't seem to care. Contrast this with gold. When you own physical gold, there's significantly less counterparty risk. You're not relying on a bank, an exchange, or a blockchain. You're not trusting a politician, a developer, or an influencer. You're holding a tangible asset that has intrinsic value. Gold doesn't need a third party to validate its worth. It doesn't depend on the stability of a financial institution or the integrity of a blockchain. It's real. It's timeless. It's yours. The Trump meme coin fiasco is a perfect example of why counterparty risk matters. It's a reminder that in a world where trust is eroding, you don't need to own assets that don't rely on trust. And that's why gold and silver are so important. They're not just hedges against inflation. They're hedges against the entire system. They're a way to protect your wealth in a world where counterparty risk is being ignored, being dismissed, and frankly, is being exploited. Of course, this isn't the first time that we've seen bold proposals to shift away from gold. Do you remember when Michael Saylor, co-founder of MicroStrategy, suggested that the US government should sell off its entire gold reserve and buy Bitcoin? It was just last year. He called it his evil genius strategy, arguing that it would demonetize gold once and for all. But if you take a step back and think about what gold represents, for over 5,000 years, it has been the ultimate safe haven asset, a store of value that has weathered wars, it has weathered economic crises and market meltdowns. During the financial crisis, COVID-19 pandemic, gold prices have supported themselves while other assets crumbled. Bitcoin is just 15 years old and its value can swing by 10% in a day. Meme coins, they're even more speculative, driven by hype and manipulation rather than substance. Gold does not need a rebrand. It doesn't need blockchain buzzwords to prove its worth. It's timeless, it's tangible, and it's trusted by every major economy. Meme coins, on the other hand, they can be created overnight, hyped up and dumped just as quickly. That's the difference. Gold takes time, it takes effort, and that is why it holds its value. So what's the takeaway here? The Trump meme coin fiasco is just yet another reminder that the system is broken. The crypto markets are speculative and they are unstable. The US dollar is losing purchasing power, and the people in power are steering the economy for their own benefit, not yours. The real question is, are you prepared? If you haven't already started adding gold and silver to your portfolio, why not just start small if you have to, but start, because the time to prepare is before the crisis hits, not after. Gold isn't just this hedge against inflation, it's the hedge against the entire system, and it's a way to protect your wealth. So this isn't the kind of message you're going to hear on mainstream media or from politicians, because they want you to believe that everything's fine, the system is stable, the dollar is king. But you and I both know better. The cracks are widening, and the Trump meme coin debacle is just another symptom of a much deeper problem. If you found this video helpful, hit that like button, subscribe to the channel, and share this with someone who needs to hear it. Thanks for watching, and we'll see you in the next video.